It's May 27th. We've got a monster disclosure day. Maybe 30 companies, so we're moving fast. Sam, what jumped out?
Two clear themes: companies dissolving capital tie-ups and companies betting big on AI. Plus one IPO with a serious concentration problem.
Let's start with the IPO. SNV Research, ticker 339A. Revenue up 12%, operating profit nearly doubled. But check the risk section.
Honda Group now accounts for 42% of sales, up from 36%. That concentration is heading the wrong direction for a newly public company.
They also recovered 211 million yen from a prior lawsuit settlement. So clean that from the run rate. The innovation centers with D-Space and Dassault partnerships are the real story here.
Sticking with convenience retail, 3F7544 just terminated its capital partnership with Lawson.
Lawson exited the top 10 shareholders entirely. The business alliance continues, but the cross-shareholding is gone. And 3F hit its midterm profit targets a year early.
Dividend hiked 80%. This is a harvest phase. They've stopped opening new stores and CapEx dropped 83%.
Same Lawson pattern with Lawson Poplar 7601. Lawson divested its entire 18% stake.
Funded the buyback via Class B shares issued to investment funds. MIT Regional Reconstruction now holds 10.5% as the new second-largest shareholder. Net income dropped 64%, though the franchise subsidiary stayed strong.
They're pivoting hard into frozen food manufacturing. CapEx surged 178% and launched 3 unmanned store formats. The restaurant era is done. They're becoming a food factory.
Now to M&A plays, Frontier Management 7049 is turning itself into an investment holding company.
They formalized long-term holding M&A as a second engine. TKP took a stake and gets a board seat. Net income fell 31% due to basketball team subsidies and impairment, but the fund segment turned profitable.
The consulting segment actually swung to a 164 million yen operating loss. They're sacrificing short-term profit to build the holding platform.
Shikigaku 4413 went on an M&A spree. 4 new subsidiaries, workforce up 65%.
And they pivoted hard from local 5G to generative AI as the strategic focus. Revenue surged 50%, but operating margin compressed from 21 to 19.5%. First ever dividend declared at 7.58 yen.
The CEO still owns 39%. That's a governance red flag they actually disclosed themselves. Good for them.
Ricksoft 4429 also pivoting to AI, but with a twist. Revenue up 20%, net income down 26%.
Prepaid expenses jumped 1.85 billion yen. Contract liabilities up 2.12 billion. They're shifting to large multi-year deals. Equity ratio crashed from 45% to 34%.
They also changed auditors, cut the board from 4 to 3 directors, and dissolved the management meeting. That's a lot of governance reshuffling alongside a strategy pivot.
One supply chain story. Japan Process Development 6142. They exited their China subsidiary and launched EV tooling.
They also flagged tungsten supply instability from Chinese export restrictions as a new risk. And Hitoshi Mori took over as president from his father. Generational transition at a founding family firm.
Net income swung from a 3.76 billion yen loss to 693 million profit, canceled 700,000 treasury shares. They're also targeting net zero scope 1 and 2 by 2035, from zero targets to an aggressive one.
Finally, Deseki 9793 spent 13 billion yen to take subsidiary Deseki Eco Solution private.
Then slashed its capital from 2.3 billion down to 300 million. That's a deliberate squeeze-out, delisting and capital reduction in one move. They also acquired Syncmuff for MOF Materials expansion.
Record sales of 71.8 billion, but new orders fell 20%. That backlog decline is the risk to watch here.
Big theme, companies are actively restructuring capital ties. Lawson exits everywhere while betting on AI and M&A platforms. Watch those backlog and concentration numbers.
Tomorrow, we'll see if the AI bets actually have revenue behind them. Good night.